All right, thank you for joining us in the Futures Initiative on another trade recap. Tonight I have Dubster joining me, and we are going to walk through our trades of today, look at tomorrow, and look beyond. Thank you, Dubster, for joining me tonight. Take it away, my man.
Sounds good. All right. So let's go ahead and talk about today's setups. We're going to go ahead and look at the 1 hour chart. Today, we actually played a bit differently, and not because it was a bad thing, but the reason why I'm saying this is because we normally play off a healthy order block, right? Which in this case, we have maybe a healthy order block here, but the reason why it's not considered a healthy order block is because in this case, this red candle is my highest one. The one next to it doesn't have a fair value gap, so I went ahead and mitigated it. I called it invalid. But the reason why I still played in this area was because I figured that maybe this buy side liquidity from this section here, this consolidation from this section here was going to be enough fuel for the market to take a rejection, right? Which, as you guys can see, it actually did not. But I want to go ahead and show you guys that the reason why I also entered was because when I looked at the 50-minute, we have the buy side liquidity here. We have the consolidation in the specific section. I have the pretty much the healthy order block kind of in the 50-minute, which I know that it's not really the strategy that I play off because of this specific candle, which mitigates this guy. I still went ahead and played it out the same way I would play it out as if it was my regular order block. And this guy right here is my healthy order block, right about there. So the reason why I played it was because of all that consolidation. When we come back down to the specific section, we can make it there. I went ahead and drew the Gann box. As we draw the Gann box, entry point for most contracts is at the 0.5. Stop loss is going to be a couple ticks above. In this case, I actually had it a bit higher. My stop loss for this guy was at this specific level, right here in this candle. Reason why is because of the 1 hour. I figured that if it might want to go ahead and continue to the upside, it might reject a bit high right here. I'm gonna go ahead and mark it. It might go a bit higher and then continue to the downside, right? So that's the reason why I had my stop loss there. On this specific trade, there's one thing I noticed. I entered 2 contracts here, entered 2 contracts here, and then I entered my final positions on this specific section. And as you guys can see, I got wicked in here. Then I got wicked in on that same candle off the 50-minute. We can zoom down to the 5-minute. I got wicked out on this same candle. I got wicked in for both contracts. I was in for a total of 4 contracts. Market came down, went ahead. We went green, red, green, green for quite a while. Then I noticed that in this specific candle, we're a couple minutes away from market open. I was pretty scared about this, but I ended up trying to close my I had a bunch of errors. I did screenshot them and I couldn't close my accounts. So I ended up leaving everything there. Market open, wicked me into my full position size, came back down. And when it came back down, even though I was up so much here, I got greedy and expected it to come back down a bit more. Reason why is because it was market open. I figured it was going to be so much volatility and volume to the downside, and I expected that momentum to the downside pretty much, and I never took profit here. So that's just something important that I wanted to say, that maybe I should start focusing that on my 2-to-1 ratios. As you guys can see right at this specific section here, this right here was a 2-to-1 ratio for my entry. And even though I was on, this was a $1,200 win. I was out here $600 from the negative, and I could have just made the $1,200 if I would have taken full profit, which I never did, and I ended up losing this specific trade. So lesson of the day is, from now on, I'm gonna go ahead, follow the same entry strategy as I entered here. 2 contracts, full position. Come back down as soon as we hit the 2-to-1 ratio. I'm gonna go ahead and cancel half of my positions no matter what. Soon as that happens, I can either decide whether if I want to come back to break even or kind of have a smaller drawdown. Reason why I say that is because most of the times when the bigger moves happen, they go in, wick me in, come back down. I take a trim. I move my stop loss to break even. They go back up, wick me out, and then continue to the downside. I've seen that happen multiple times. So that's the reason why I'm still trying to figure out whether if I'm going to allow the drawdown after trimming or should I just move it to break even and then from there just take it as a loss, you know? One thing, I did take a quick scalp with one of my contracts from up here. I entered on this position to the downside. But this also, again, is not a healthy order block off the 1 hour, so I'm not going to go ahead and show it. I'm going to go ahead and show this specific trade that I did take, though, off the 1 hour. We went ahead and took this trade later in the day. As you guys can see, we have the push to the upside. This was my second push. This is the reason why I didn't play this specific section. We always play off the first one, not the middleman. Came back down. We have the healthy order block here, our fair value gap that backs it up. Came back down. We saw the 0.5 section. Now in this specific area, as you guys can see, we always play off a couple ticks on this healthy order block. But the reason why I actually hold longer this time and I accepted that was because I already had this 4-hour fair value gap drawn. So I went ahead and moved down my stop loss to this specific section and gave myself some room. I was like very confident it was going to recheck from here, come back up. And due to that confidence, I actually took a winning trade here. And it was about, if I'm not wrong, I think it was like 706 profit on this specific section. So I'm happy about this trade. As you guys can see, when it came in, it wicked me in. I also never entered at the zero. I expected this to go to the downside, so I entered on this green candle here on the 0.5. As you guys can see, it went back up to the green side, came back down. I was red for a while, and then it continued to the upside, and I took profits somewhere around here. I was currently at work, so I target this for value gap, and I got off here. So I got out earlier than I should have, but I didn't want to stay in the trade for so long. Another thing is the ratio, 2-to-1 ratio. I got out before that, but I think this was a really solid trade, and I'm happy I did take this trade. Fantastic. Also when calls around this area, and it was funny because I was actually on my Discord chatting with him, and when I was about to send him a message, I was actually going to send him a message saying, "Hey, what do you think about calls here?" Next thing you know, I see an alert from him coming out calls to the upside for QQQ, and I was just dying, you know. He never found this about he didn't know about this because the message never went through. Because as soon as I saw your alert, I was like, "Oh, like perfect timing," you know, because I was gonna jump in on calls here. So I thought that was just funny. Um, for next week, based off the healthy order blocks, this is something I would like to take. So I have this one set up already. I will have an order limit here next week. So obviously I have to stay true to my strategy. So I will always enter here. Other than that, I expect upside. From now on, I think we will come down to the specific area, grab the remaining stuff from here, and continue to the upside. I think there's so much value up here that we need to balance out. And I hope for the best that this does happen. If it doesn't, we'll see what happens.
I like it. I like it. I I like it a lot. You know what? This is fantastic. You have your setup in place, you have your exact entry, you have your drawdown, the amount you're willing to take, the amount you're willing to lose, you know what you would like to see, and everything in between. It's great. You know, this is getting refined every night that we do these videos. We walk through our plays. This is just getting better and better and better. And it's something that I'm actually, you know, taking from you and saying, you know what, I need to better draw out my entries because you like the healthy order block, you like those longer plays. I love the contrarian plays, the plays that take reversals, the quick 10-20 bars.
Yep.
When in fact, we could be holding this a lot more, which is exactly what we should be doing. So I applaud you for this. You took great setups today. You know what? Unfortunately, shit happens, and we did get stopped.
Yep.
Actually, on my futures account, I had an order to take the moment it hit the 4 hour fair value gap, to the bottom, which I was not able to take because, well, not able to take it, but that's okay. So let's talk about, we see what Dubster saw, we see how he was all set up. Let's talk about how I was set up. All right. So how was I set up? Let's start with looking at what did the weekly show us. Right. This week we took out the liquidity on the downside, took out the liquidity all from May 30th. So we took a lot of liquidity out. So I knew that we were done with the downside potentially, but wanted to keep it on my radar. We have another weekly fair value gap to the upside, which I believe is going to be taken here rather soon. So start on the daily chart. On the daily chart, we saw yesterday how we came up, we scorched the highs of last week, minus the 22nd. So that to me indicated that we were going to go higher. We also failed to create another low. Well, failure to create another low and taking out the upside, very bullish indications on my end. Unfortunately, we pretty much dojied today, which was okay. I'm cool with that. I was not expecting all of this, but you know what? I'll take it. It took out a lot of buy side liquidity, but it does leave large fair value gaps. So, understanding that we were bullish, even though we are bullish on the weekly and on the daily, we still can have bearish intraday. Hence where today comes in. So you see this colorful design I have. It's really a work of art. Truthfully, it just is so colorful. There's so much balancing that needs to happen on the upside that it's hard not to see price move in that direction. Whereas we don't have a lot of that to the downside. We just have the weekly fair value gap. So looking at the 4 hour, we saw that from yesterday, we created this 4 hour fair value gap from this 1 hour or from this propulsion block. Well, let's talk about that. What is a propulsion block and why does it matter? Well, the propulsion block does exactly as it sounds. It propels price upward. It is a setup taught by ICT where he shows that when you have an immediate rebalance, you create the order block. You are permitted to go about halfway down into that previous order block. But if you're wicking down, mind you, pay attention to the bodies, not the wicks. Pay attention to the bodies. The bodies, then it can go all the way up, and it's very bullish, and it propels price upward. So we see that's exactly what happened here on Thursday. We created this 4 hour fair value gap, failed to come down. Again, created another propulsion block. It went all the way up. Mind you, this is on a 4 hour. Like this is a lot of upward movement all happening at once. So we come all the way up past a 1 hour fair value gap into this order block. So now this is very important. Why is this so important? Well, if we take the midpoint of said order block, okay, let's go ahead and take the midpoint top to bottom right here. Let me grab the bodies. All right. You see that we're not even halfway into the order block. When this comes down, grabs liquidity, right? Comes all and then goes all the way up. So seeing that happen early morning too. This was 6 a.m. Eastern. This is still during the main part of the London session. We then we run into the daily fair value gap. We come up to the 4-hour fair value gap, drop off immediately. Immediate rejection. Come back down. And now we are into the New York session. So let me see this downward candle, but let's really explore that. So let's head down to the 1 hour. So like we said, we saw all this run up in the New York session, in the London session. I was actually trading this. I was. And here's where my mistake was. I thought after it took out the highs up here, it was going to drop down. It did. I was not expecting this to happen, but I'm glad it did, because we've been waiting for the relatively equal highs up here to get smacked, and it got ragdolled. Like that did not just get smacked around a little bit. I mean, that thing got ragdolled. It got, yeah. Like you see all this consolidation here. Yeah. There was no consolidation on the upside, but we did, however, create a fair value gap to the downside. So this right here, we saw the fair value gap be created. We came into the fair value gap. Odds are, Dubs, that this is at the 0.5.
Just about there. Well,
We're talking a bar and a half, maybe. Dear God. So almost a bar and a half there. Didn't even get to make it into this order block. But that's okay. You know what? That's okay. I've noticed that this bear flat this kind of slow and choppy run up, I believe it's called a bear flag, right?
yeah.
Yeah. So this is awesome, because where you normally get something like this, find the right tools, where you normally get something like this, and then you see it drop off. We're actually seeing it do something different. It's more so, and I've noticed this happening a lot. It's usually a very short squeeze. So you still get the same choppiness coming up. They get the spring, and then it comes all the way down. So I've noticed this has been happening a lot. So those who go short here get absolutely demolished. But lo and behold, we test the midpoint of the fair value gap, of the 4-hour fair value gap, the consequent encroachment, come down. To be frank, I saw this massive run up at market open. It took puts off the bat. Off the bat. So you can imagine how happy I was to see price run straight through. Took a nice 60% loss on those puts. Unrealized loss, because diamond hands, we held them. Didn't even average down. Imagine if I had averaged down. Had a nice contract price of like 0.3 or 0.4 instead of what, 5.5?
Yeah.
Either way, it I believed in the downside because if we look on QQQ, we can look at the same 1 hour chart. Look at that. Look at all that. Look at that liquidity void created. So why did I believe that this liquidity void would get absolutely whacked? Well, as you can see, we have pretty much our close or our open, which is, I guess, the New York Open here. We didn't even come back through it until noon. Okay. So I thought this was going to be it. We could have taken profits here, and then it ran up against us. I'm like, oh, well, you know what? That's okay. But remember those relatively equal highs we had? Oh, so glad they got burnt. Rejection, rejection. Takes out the buy side liquidity up here, runs straight down. Beautiful play. $7 run. Could not have asked for more. And we did not even take out sell side liquidity, which this is perfect because that means we have a little bit more room to go down.
Yeah.
Why do we have a little bit more room to go down?
Well, I expect it to go down, possibly because of that sell side liquidity at the bottom, but we were also down there. We're in that area where price action came down to. There's a 4 hour fair value gap right there.
Yep, absolutely. You called it, my guy. You called it right down here.
Mm-hmm.
I definitely think that we could see a little bit more downside, just a little bit more. Dear Lord, wow. This is a previous 4 hour fair value gap, but we kind of jumped above it, jumped around all around, and now have rejected off it, which is perfect. But let's go back to NQ. So we knew that we were bullish, price skyrocketed and then fell to the floor. And it's on the 1 hour. So on the 1 hour, seeing this, I knew immediately after we hit the fair value gap, it was time to start looking to the downside. Okay.
Mm-hmm.
So, and price, so the 1 hour is mainly for me to look at the overall picture. So again, we had that for value gap here. So let's keep that in mind. So now let's drop down into the 15-minute. Okay, this is a much clearer picture. All right, so we have this 1 hour fair value gap. And we're saying, okay, we want to see price come back down through here. Come back down, touch the fair value gap. Well, that will actually create the fair value gap, and then it runs. Okay, so it goes from the daily into the 4 hour. This is why it's great to have your higher time frame fair value gaps overlap, because this is where it's beneficial. You see it rejects off it, comes back down to the daily fair value gap. You know, that'd be a nice 20 bars little snip snap. And then runs up, comes back down. But look how clean the rejections are. Look how clean the price moved. This is usually why I enter immediately when it touches the fair value gap.
Makes sense.
Because especially on a rejection up to the fair value gap. So this is something that I'm going to continue to monitor and watch. When I see on a 4 hour and daily when we have price that runs down, it comes back up. Yeah, I'll take the 5-bar hit. No problem. My target is on this, like on the next run up. When I see this happen, is to take the midpoint of it. So we're on a 15-minute chart. So what does that look like? What kind of drawdown would I be in? Okay, so I would get in at 15 to 9.75. I'm only out 3.5 bars. Stay less.
No, it's not too bad.
3.5 bars? My man. That's what? 14 ticks?
Yeah, pretty much.
You do a lot of damage with 14 ticks. I'm usually expecting 20 ticks against me. So I'm cool with that. I like that. Oh, and I will take that because that is going to be something that I look to enter. Now, I did catch this to the downside. I did not enter in here exactly, but I caught this. Now, again, we talk about learning to hold and hold and hold. I went in with a higher amount account with a higher leveraged account. I was in with 5 minis, and we caught some bars. We caught some bars. All right, like I think had the account not gotten blown, we could have had we had a very profitable day. It was up $5,000 on the account.
Yeah, it's not too bad.
Not too bad.
That's not bad.
That's not bad. My man was 62.5% to the profit target. But unfortunately, my rhythmic connection cut out midday, and I could not close my positions. And what ended up happening is I was leveraged in here, and I went top to bottom of this fair value gap, which blew my account. It just blew it out from under me. Now, where should I have targeted? I should have targeted at least the opening price of today, which would have netted me almost 100 bars. That would have passed the account one day, but neither here nor there. It's wicks like this that actually give me pause. You know what I mean?
Yeah.
Like these wicks that almost come back up. That's why I like to scalp, because in case I don't get in right here, it comes back up. I can take that and write that down and I did, because I took this. I was like, ooh, more. This is gonna give me another opportunity. So where was my stop loss? Above. Now it was a wicked stop loss. Wicked stop loss. But we caught another 30 bars. And almost 30. But I took it to almost the end of this candle and I said, okay, I'm out. I'm done. Bye-bye. Smell you later. And then obviously that did not happen.
Sure.
But we're learning. I'm paying my tuition to the market, and every day is going to get better. Every single day.
That's correct.
So that means come Monday, it's going to be 10 times better than it was today. You know what? I don't even care if it's 10 times better. I care that's 1% better. If I'm getting 1% better every single day, I'm good.
More than most.
just striving towards that goal of consistency and of holding the plays and continuing to just get better and better and better and better. So I took this play, also took puts to the downside that ran 200%. We got out at 200%, which I was very happy with. It ran a little bit further, but we got out here, which was so cool. So that was a nice call out. I know others went against that call, and I'm like, I love it when someone goes against my calls because if they have a different strategy, I'd love to see it. No, I mean it's motivating because if I'm right, it gives me more confidence in my play. If I'm wrong, it teaches me to look for something that I might have missed.
Yeah.
So took this to the downside, and then we wanted to see price balance itself out. So what do I mean by balance itself out? Okay. Here is price through all of Friday. Let's go to Friday at midnight right here. Okay. Friday midnight. Yep. Okay. If I draw a line from price at Friday at midnight, how close are we to finishing?
Right about there.
So would you say today we balance price out? So, but how could we also have looked at this? Well, we could have said, okay, if we want to continue to see upside or downside, take our fibs, our little fibby fibs. We need to find a higher time frame. So let's go ahead and find, see this impulse wave. All right. Maybe we've only come to equilibrium and we rejected. Okay, maybe. But this is a classic just balancing act that we do. Okay. Classic. I've seen it so many times and we keep looking out for it. But again, we're on a 15-minute chart. So this is very, very, very intraday play that I'm going to keep paying attention to because Dubster, as you have shown me, the 15-minute actually works really well instead of the 5. So I think it'd be good for us to start plotting on the 15-minute, 30-minute, 1 hour, and 4 hour.
Oh yeah.
And let's start seeing what we can find between them. I have a feeling that we can snipe our entries a little bit better. But what do I expect for next week? I expect for us to have more bullish movement. I believe that we are going to have a retracement and then rocket up. So, Dubster, any questions, concerns, thoughts, analyses, anything?
No, not today. I think today was a really good day for Friday and a news day. I think we rocked it. We took a loss and we took the loss with our heads up. So I thought that was really good. No feelings. I wasn't upset when I took the loss. I was actually before I got worked out, I was like, I'm taking the loss here, guys, and I figured out what was the next move. I simply moved on. So I think that was one of the most important things that was a point, like a good thing to point out today, a good aspect. But other than that, no questions today. I think we pretty much, even though I never texted you on that cause, we had the same setups, our same targets always, like always. So that's something it's always nice to see.
Absolutely. And we're going to meet up later on, walk through the charts, and make sure that our entries are more on point. But as always, Dubster, I appreciate you joining, sharing your knowledge, spreading wisdom, and sharing your plays. For everyone out there, please leave your comments. Please let us know what your thoughts are, what your daily bias is, what your weekly bias is, your monthly bias. Let's talk about it. All right, guys. That concludes our trade recap for today. Thank you for joining, and we'll catch you next time.
Yeah, bye bye.